Welcome back. A couple of minutes ago, we were down in D.C. talking to Katie Lyons about what's happening with Bed Bath & Beyond. The talk earlier was that a new CFO was coming in. We're just getting some clarification on that. A Bed Bath & Beyond spokeswoman saying that the reorg report on this CFO story is actually inaccurate. And as you can see, we are getting a fairly swift response within the stock, now only up by 2.5% and dropping fairly sharply on the back of this clarification coming through from the company. Bed Bath & Beyond pairing gains this after the company says that the CFO report is not true. If we get more details, we'll bring them straight to you. It's time to take you to Chicago now. Time for Futures in Focus. Baruch of Blue Line Futures joins us now from the CME. It's that time of year. We talk about 2020. We talk about what sentiment looks like. Look, my sense, Bill, is that the market generally is pretty glass half full going into 2020. Do you think it's too full?
Absolutely. I mean, well, I'm not saying it's too full, but optimism is robust right now. Sentiment as good as it's going to get. Now, am I calling for correction? Absolutely not. But Q1 does tend to be slower than people expect. And, yeah, U.S. and China trade right now, not having those December 15th tariffs implemented was what really brought this tailwind. There are still some lingering, questions here on the trade. And for now, we do have a trade truce. But really, they're saying that about 0.8 we could see a hit to global growth through next year. So, again, there's still a lot of questions to be answered. And again, Q1, slower than people usually expect it to be.
But it's incredibly cheap still to protect your portfolio, at least from an equity point of view. Why is that?
I think that people aren't pricing in the potential of a downside. And listen, I mean, we're basically on a decade run higher. The market has broken out higher from a new start of a bull market, essentially, given what happened last December. So, I mean, I'm not calling for a real correction. And, I think that you do have to protect your downside. I think there's a number of ways we get into portfolio management I could talk here all day about. But I think what people need to start looking at is things like gold, things like the treasuries. You can also sort of bring value to what you're investing in. I mean, look right now, the 10-year yield, it's just hovering below 2%. I think 2% is going to be a real ceiling until we see the economic data turn a corner. Right now, you're seeing the Fed, the odds for the Fed cut in March have almost totally dissipated. So, we're going to have to see this data come around in order to sustain this move in the broader risk sentiment or risk environment or equity market, however you want to call it. That data is where the question is. But if the data doesn't show up, the 2% is going to quickly become 1.5%. The way to play it is buy the 10-year futures. The prices are inverse of the yields. So buy the prices. Another thing is gold, seasonally bullish. Started yesterday, December 23rd. You buy gold, hold it through January. It's worked 11 out of the last 14 years. And heck, it's up almost 2% since the start of yesterday.
Have a great holiday, Bill. We really appreciate your time. Bill Baruch of Blue Line Futures joining us out of the CME. Coming up in the next hour, UBS Wealth Management's head of the UK investment.